Welcome back, everybody, and welcome to the Virtual CFO Digital Agency series. This is actually part 2 of the series. In this series, we're going to actually go through the production employee part. Now, if you haven't watched part 1 yet, I highly recommend you go ahead and go look at it, mainly because we go over concepts that will go back into what we're going to go through today on the production employee, and it's critical to have an understanding of the concepts on how your financial metrics work within a company before you start looking at the production employees. So if you recall, in our first series we went through the top level or company level financial metrics. Now we're going to go through the lower level or the production employee level, and we're going to show you how to go through the production employee, and we're just going to take one employee and show you how that relates to the total revenue at the metric level at the top level. So let's go ahead and take a look at how we go through that process. So if you recall, this was the financial information that we had discussed in the previous session video, and within it, you'll recognize all these numbers are exactly the same, and we left in the respective percentages of gross profit, overhead, and most importantly, the net income. So in this series, we're just going to focus on one individual employee. We're not going to go through the 5 or 10 production employees. We're going to make it as simplified as possible. So moving forward, we're going to go ahead and utilize just this one column to show you how everything trickles up. So as I mentioned, we first need to understand what are the total hours that the production employee will be working. And more importantly, we also want to know what are the chargeable hours the expectations will be for the respective production employee. Now, brief side note, make sure you understand the difference between chargeable and billable. Chargeable is time that an employee worked on a project, whether it's optimization for SEO or a digital campaign, whatever they're working on. That time on that client is chargeable to the client. Now, billable is what you can actually bill to a client. Now, you rarely can do 100% chargeable unless it's specifically set in the contract. So that's an important thing to understand, the difference between chargeable and billable. And for right now, we're just going to go through chargeable. So back to our example. In this one, we're looking at the weekly expectations for this particular employee. And on this employee, we're saying they are expected to work 32 chargeable hours out of a total 40-hour work week, or come to 80% realization on what they're expected to work. And so go through and you do a very simplistic formula, and you find out, okay, total working hours we understand is going to be 2,080 hours. Now we're assuming that is just a straight 40-hour work week, and from there we're saying they're going to put 32 hours per week in, 52 weeks in a year. That comes out to 1,664 chargeable hours. However, we have not backed out the items that a lot of times people forget: the PTO, the vacation, the meetings, what have you. So next thing we want to do is back that information out. So to back out the non-charge hours, you first need to calculate, okay, how much PTO, pay time off, am I going to give this individual? Now, a lot of times people will lump vacation and sick time into an overall number of PTO, pay time off. However you do that, it's really up to you. But in this situation, we're just going to lump it all together and say they're going to have 120 hours of paid time off, which, if you do the math, is approximately 15 days. Then holiday time, Christmas, Thanksgiving, Memorial Day, Labor Day, what have you, all the holidays that you allow the employees to have off, you need to calculate that in there. Then the next item, company meetings. A lot of times you'll have a company-wide meeting where you want everyone to get together and either brainstorm new products, new services, brainstorm the next year, map out company morale. Whatever your company meetings are, you need to bring that into consideration. And then continuing education. Now, if some of your employees have designations and they have to get continuing education every year, you should break that out as well. So coming down, we now have a total in this situation of 272 hours of that employee's time that they're not going to be able to charge to a client because they either on vacation, holiday, company meeting, what have you. They're not able to charge time. So then we get down to our net chargeable hours. And in this situation, we've got 1,392 chargeable hours, or utilization of 66.9%. And again, that percentage is really just taking the respective charge hours by total hours. So we're saying of the 40-hour work weeks that this individual is going to be working, we're going to get a true realization for the year of 66.9%. So now we come down to what is that production employee's billing rate or standard rate. Now this is going to be the rate that traditionally will be assigned to the respective employee, and like I mentioned, rarely will you be able to bill 100% of whatever the hourly rate is, unless you're an attorney and you can do it that way. Most organizations, and I don't care if you're a digital organization or if you're an accounting firm or what have you, you're going to have a write-down. It's just the nature of the beast. There's going to be inefficiencies, and that's really what a write-down truly is either an inefficiency on the employee side, the production employee side, or an inefficiency on the billing side, or I should say the bidding side. So a lot of times you may be bidding for a particular project because you know it's going to lead to other stuff, so you may undercut what you normally would charge for that project, and that truly goes into the write-downs. So you want to bring in what your average write-down is based on the production employee, and keep in mind you want to make sure you're calculating these write-downs based on the level. So if you've got a higher level individual has a higher billing rate, and you incorporate all the write-offs on a particular project and you allocate that to the production employee who's at the bottom level, that's probably not going to be apples to apples there, because of how the billing rates go. But regardless, on the employee level, you need to calculate what the average write-down is, so you truly get to what the average billing rate is. Because yes, in this situation we're saying this individual has a $170 billing rate, the standard rate, but in reality the real average billing rate is $163 an hour because of inefficiencies, bidding issues, what have you. So then we come down and we say, okay, we know now that our net chargeable hours for this individual is 1,392 hours, and we know our average billing rate is $163 an hour. So that comes out to $227,000 of estimated revenue for that employee. Now, for those of you who recall on our previous video series, that was the actual revenue number that we used to show you kind of the top level. And so what I've done is I've actually segregated out and I've set up just a financial metric for one production employee. And here is that $225,000. And for those of you who have Excel, yes, it is linked to that respective tab. And the beauty of this is once you build these up is when you start manipulating some of these numbers, you can see how the overall effect is. And that's truly what we want to do. I mean, we can calculate billing hours and standard rate till we're blue in the face, but how does that affect your financials? How does that affect your company's financials? And that's why I wanted to show you how it comes through to the top level here. And if you recall, in the first video series, we were kind of doing it backwards. The reason why I was saying we were doing it backwards, going over this information first, is because this information flows up into here. So a lot of times once you've developed these worksheets within your firm, or you hire a virtual CFO to put these together, you'll start on the utilization area first, and that's truly where you want to get. And then this last number, so I'm sure some of you are looking at this and saying, what's this? The effective rate. Now, what the effective rate truly does is it takes your utilization rate, which in this case is the 66.9%. Remember, that's as much time that can truly be chargeable by the employee times the actual billing rate, the average billing rate, sorry. So our average billing rate, we can make a billing rate as much as we want here, but if we know we have a ton of write-downs, then we really need to know what our average billing rate is, and then what is the true utilization that this person can do, and that gives us our effective rate. Now the effective rate is very important that you track that. It might not make any sense right now as you're looking at this, but as you start tracking that, you start looking at that on employees. So you have, in this case, I'm assuming this production employee is kind of a beginner level, bottom level person who's going to do a lot of the grunt work type stuff. Once you understand what the effective rate should be for those respective levels, you can then analyze, one, is a person higher, are they producing more than what they really are? Are they not producing where they should be? And if you can obtain the information, how's your effective rate compared to your competitors? Again, efficiencies are key to making sure you're a profitable company. So now that we've gotten this set up, let's go ahead and start manipulating some of these numbers. Now, if you recall, in the first series I talked about financial levers. This right here is one of the biggest financial levers you can pull for your company. And I'm going to go through a couple of these items so you can kind of see what happens. So now let's do a hypothetical situation. Let's say we've discussed with this client or this particular employee, and we say instead of 32 chargeable hours per week, we want you to increase that by 1 extra hour. So look what happens when I add 1 extra hour. So instead of 32 hours, I'm going to say this person's going to do 33. 1 extra hour. Let's see what the input is. So, if you recall, that was 227. It is now 235,000. I actually put a formula here so you can quickly see what the effect would be. So 1 chargeable hour, remember just 1 hour, has now increased the total estimated revenue by $8,400. And that, again, that's assuming write-downs stay the same, billing rate, everything else stays the same. That just increased $8,400 of revenue. Now, what's that effect on your financial statements? Well, obviously your revenue's gone up, your net income's gone up, but look at this. Your percent of net income to revenue is now 16.2. That's almost a full 2% higher than what it was before when you told those employees just to work 32 hours. Now you're telling them to work 1 extra hour per week. Again, 1 extra hour, that's 60 minutes, is going to add 2% to the net income on your bottom line. It's going to add $8,400 based on just this one employee. So that's pretty impressive when you think about it. Just 1 hour has that much effect on that. And that's the beauty of getting these work papers set up within your company to be able to analyze that. So let's go ahead and put this back. Now let's say the employees are really, really great. We enjoy them. We want to do something beneficial to them. We want to offer them, we don't want cash is a little tight right now, so we don't want to increase their salary. So maybe you want to give them another day of PTO. So instead of 120 hours, you're going to get that to 128 hours. That's 1 extra day. That's the overall effect of revenue. Just giving 1 day of PTO is $1,300 in total. So do you give them a $1,300 increase in salary, or do you give them a PTO? Again, the beauty about this is it allows you to see, okay, morale's a little low, I can give them PTO, I can't really give them salary. How does that affect? Now, let's see how that affects your overall net income. Your overall net income really didn't change much. It's actually less than a percent. It's actually 0.3%. Again, 1 extra day didn't have that big of an impact on the overall financial condition. Now, let's say you wanted to give them, let's say 2 days. So instead of 128 hours, they now go up to 136 hours. Well, again, $2,600 there. And your net income's getting down. Now remember, we do not want that number to get to 10% or below, because otherwise you're at what's called the new break even. So that is very key to keep that in mind. So let's go ahead and restore this back to its original setting. So now we're back to, here's our original setting. Now let's look at our write down. So let's assume we are not as efficient as we used to be. And let's now assume instead of 3% write down in this particular example, let's assume we are now at 5.8% write down. What effect does that have? Well, you just lost $4,700 because your staff are not as efficient as they should be. You're having to write off a lot more time of theirs. And again, this is without putting any overtime or any additional chargeable hours. And again, that goes through your bottom line. Your net income is dropped by 1%, all because of inefficiencies. Now keep in mind, this is one of those financial levers. You can control this if you keep an eye on what's causing your write-downs. Again, some of the write-downs might be because of a business decision, because you took on a job at a lower rate than you normally would. But as long as you understand how that impacts everything that flows through. Now let's go back over here to the hours. And we hear about people saying, hey, you know what, I don't want to work 40 hours. I'm a young hip person. I only want to work 36 hours. So I want to have a half day Friday every Friday. So every Friday they want to have a half day, so they work 4 hours in the morning. So we come over here and we say, okay, if we're going to do half day Fridays for everybody, so they're now only working 36 hours per week. So you come through and lo and behold, nothing's changed, but they have to continue to work their chargeable hours. If you reduce your chargeable hours by the same amount, so you said, okay, you got a half day Friday, that just means you only have a 4-hour cushion between chargeable hours and weekly hours. If they say, no, I should have to work 4 hours less chargeable hours as well, if we put that down to the 4 hours, all of a sudden you just lost $33,000 per employee by them taking a half day Friday and not keeping up on their chargeable hours. So it's important that you understand how all these decisions flow through. Yes, you can have a half day Friday, but you still got to get in the total charge hours. Otherwise, in this case, then you just lost $33,000 in revenue, potential revenue, mind you, and your net income is now at 6%, and that is well below the 10% that we want to make sure you maintain, so that you are in the correct profit realm on your break even. Now again, you can go through and you can manipulate your standard rate, you can go through and manipulate the hours, so on and so forth, and that's the beauty of this. Now I'm actually going to do a third video presentation, and we're going to go over how do you calculate this rate, and I'm going to let you in a little secret. It's going to tie to that number right there as well, so your salary number. So keep in mind, we're going to have that coming up here shortly, and that you'll be able to understand how that billing rate works. And once you understand that, then you'll have the full suite of information to be able to analyze the true financial metrics of your company, and to be able to pull the necessary levers that you need to pull. Thank you for watching today's video. To make sure that the quality of the video of today and moving forward is what you would expect on these type series, if you could leave me a comment, that would be absolutely great for me to be able to adjust going forward. So for this particular video, was the information covered too basic, just right, or too advanced? Let me know by leaving a quick comment below right now, and I'll be able to adjust the videos as we move forward to make sure that I hit your particular sweet spot for what you're needing for your particular company. Again, I thank you for your time.